Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about valuation from a corporate perspective. And it starts with this fundamental premise that most investor relations officers believe their job is to obtain a full and fair valuation for their underlying stock. Now, the problem with this premise is that full and fair valuation might be a 50% decline in the share price if you've missed guidance and you're not executing. And these are the two problems with this rule. One is an IRO, or investor relations officer, does not put money to work in the stock. And number two, on the corporate side, valuation is more of an art than a science. And so that brings us to this idea of how do you directly versus indirectly impact your share price. Only one constituency can directly impact your share price. And those are investors, or the buy side, because they're putting money to work, either buying or selling your shares. Now, the IRO and company can only indirectly impact that valuation because, again, they're not putting money to work in the stock. So what are the four variables to drive indirect valuation of a stock? Well, it starts with relevant information. Next is narrative context. Third is financial expectations management. And fourth is management execution. And an investor relations officer is best to use his or her time on the first two variables, relevant information and narrative context, because that's how you're really going to impact valuation. If you can provide the right information in those buckets, investors are going to better understand discrepancies in valuation multiples that they're calculating. And you're going to have some ability to impact financial expectations if you work with guidance. And when it comes to management execution, you're going to have little to no impact on that variable. So what are the key learnings? If you're an investor relations officer, focus on three things: information, context, and frameworks for investors to understand that information and context. Remember, investors calculate valuation multiples and ratios. Investor relations officers give context and information. Once you start talking about multiples and PE ratios, the conversation falls apart. Thanks for watching. Always here to help with your capital markets, investor relations, and corporate finance needs.